how you find talent, how you train talent, how you market, how you build the platform that is your credit union. If you're not innovating that, then you're not serving anybody's purpose. And that is a bigger risk. Not doing anything is a bigger risk. And that's one of the things I think a lot of people are like, well, if I just don't do anything, nothing will change. And that's, yeah, nothing will change.
The Digital Banking Podcast is powered by Typhon. Typhon is the creator of Infinia, a dramatically better digital banking platform for community financial institutions, as well as several platform-agnostic, revenue-generating point solutions. Our highly configurable platform and broad ecosystem of third-party partners ensure our entire suite is scalable and extensible to meet the needs of any FI. On our podcast, you will hear host Josh DeTar discuss today's most pressing financial technology topics with seasoned industry experts from every possible discipline.
You know, your podcast hasn't officially made it until there's ads in it. But this is one you're not going to want to skip past. And, well, if you do, feel free to hit that fast forward 15 seconds button twice. Ever wonder what gives me my energy and enthusiasm during these podcasts? You know, outside of my relentless desire to learn about, connect, share, and build up community FIs and their mission to support the communities they serve? It's coffee, and lots of it. Now, you want to know what's better than your regular old coffee? How about donating $5 to the Children's Miracle Network hospitals through Credit Unions for Kids every time you purchase high-quality, ethically sourced coffee that also provides living wages to coffee farmers. So if you want to listen to this episode with epic levels of caffeine-induced focus and help kids in need, head to javaforkids.org to learn more and buy a bag or 10. Thanks.
Welcome to another episode of the Digital Banking Podcast. My guest today is Sarah Snell Cooke, co-founder, publisher, and editor of the Credit Union Connection. Let's start with what will quickly become obvious about Sarah. She says it may sound dorky, but she really does care about credit unions. Sarah's personality is highly competitive. She played volleyball for years and even on her college team. Look, she's so into it, she even has a tattoo of a volleyball apparently, and says she probably learned more from sports than anything. Even with that highly competitive background, she was never really entrepreneurial though. Now, why do I give you all these seemingly unconnected data points about Sarah? Because collectively, they've shaped what she's truly passionate about today, and that is amplifying the voice and relevancy of credit unions to empower them to continue doing the, as she says, life-saving work they do. Now, you may be thinking, whoa, Josh, it's not like credit unions are doing heart transplants. I know. But Sarah highlights how money affects people and lives. One of the reasons she personally is so passionate about credit unions is because she was saved from some poor financial decisions when she was, as she says, young and dumb, and that the credit union probably even saved her marriage. Today, I have a really amazing opportunity to talk to Sarah about a few things. Her own story of how a 22-year-old aspiring journalist took a job from a Washington Post classified ad. Yes, kids, back when we read paper papers, to be a reporter for a CU publication in Washington, D.C. And being blessed with being in the right place at the right time, with the right attitude and hunger, and how that turned into a really special career, networking with the folks in Washington and the credit union industry, to having to pivot recently from a stable breadwinner of the family to getting kicked in the right direction from her husband to start something new and from the ground up. Obviously, with his undying love and support and elbow grease to back it up. So I want to give her an opportunity to start with telling us this fascinating Genesis story, and then how her passion for credit unions, marketing, and journalism make her an absolute wealth of knowledge for credit unions. Lots of topics to cover today, from both her story to her passion and advice for credit unions, to just some of the hot topics she's seeing and covering in the industry. So without further ado, Sarah, welcome to the show.
Thank you, Josh. Appreciate it.
All right. So, I kind of touched on it a little bit in your intro, but I'd love to have you just, give it straight from the horse's mouth. Like, talk to me a little bit about just kind of your Genesis story of like how you went from, flipping through newspaper ads to all of a sudden I would say in just even the last, couple of months becoming, in terms of my own consumption of content, one of the preeminent content providers for just news and information about what's happening in the credit union industry. So there's kind of a big story in between those two things. I feel like you should fill us in.
Wow, preeminent. That feels special. I appreciate it. No, it's interesting. So I guess I graduated undergraduate with political science degree with a minor in journalism. And I just knew I wanted to do something between writing and Washington, growing up in Maryland, in the DC area. It was just part of our daily life. You always had the feel of politics, if you will. It was like always over, kind of a part of everything. So yeah, having trying to be a first-time writer with no experience, it can be difficult. I took some odd jobs. I counted, vehicle parts of the police motor pool. I was a high school substitute teacher. I did a lot of interesting stuff.
That one is there's like some interesting data points to your story. That one's like way out in left field.
Yeah. I was not a prisoner who had to do it, I promise.
That's what they all say.
So I was, as you said, Josh, I was flipping through the Washington Post and, they were looking for a credit union reporter in DC. I'm like, how many are there? I fell into credit unions like so many people do. And that happened to be at Credit Union Times, if I'm allowed to, just mention them. It was and a lot of people know me from there because it was a great jumping off point for my career. I learned a lot there, both in business and credit unions. So much about credit unions. And so it kind of grew from there. I started as the DC reporter. I became editor-in-chief. And then finally, about 2013 or so, I think, I became the publisher as well as the editor-in-chief. So I was kind of managing sales and strategy and editorial all at once, it was a lot of fun, keeping that balance between, what is commercially viable and what is editorially ethical. I love that game. It was fun to me. And so, back in 2017, though, I decided to take my knowledge and what I'd learned and my network, my huge network I was able to build there. And yeah, just an aside, I remember my very first conference, credit union conference, as editor-in-chief, and people just coming up to me. I had no idea who they were. Just coming up to me like, Sarah, you're doing great, blah, blah. And I'm like, you're freaking me out. I'm kind of did not expect that. But yeah, so took my network and my contacts and everything and started consulting on marketing and public relations. I feel like, I learned a lot about public relations, seeing the good, the bad, and the ugly while I was at Credit Union Times and hoping to do a better job of helping people tell their story. And so, we all, of course, got hit 2019 with the COVID pandemic and being stuck inside our homes, if you will. I mean, could go in our yards, I suppose. But nobody was traveling. We weren't, seeing each other in person a whole heck of a lot, except for our families. And, that could be a bit much. And so I started these once a month networking Zoom opportunities with my clients and my credit union friends, and we would get together and talk about whatever the topic of the day was. And so from there is actually where the Credit Union Connection spun out of. I had two different things. One, there was, some who were saying that some of the credit union business partners weren't getting the recognition that they deserved for all the work they do, because a lot of credit union partners in particular tend to go that extra mile. But then also, on the other side of the marketing budget, if you will, the smaller smaller business partners, they had a hard time getting the word out that they even existed. I had a consulting client that competed with CUNA Mutual, now TrueStage, and Allied Solutions. It's hard to get your word out when you're competing with these behemoths. Not that there's anything wrong with them, but it's just, having the marketing budget and the voice to be able to compete with them. So that was kind of part of the genesis of the Credit Union Connection. This is what, my credit union posse, if you will, was telling me. And so I took that, and also what I saw, I felt I saw was missing from the credit union publications out there. And I think there's not a lot of news analysis. A lot of it is straight news. And so that's kind of, as the credit union connection matures, that's where we want to head. There's not a lot of multimedia, and so we're trying to build our library of articles that are also video and, written video, audio. And then I also feel like there's not a lot of personality in the credit union publications. I mean, because, and that's honestly the way it should be. As a pure journalist, I understand that's exactly how it should be, which is, why I think the Credit Union Connection media outlet, we want to have personality. We want to support credit unions. We want to, help with advocacy and things like that. And I think, with Gen X and the millennials coming up behind them, that it really made sense in that aspect. And then we also wanted to tackle some of the biggest risks that I see in the credit union market. And one, we'll talk a lot about this, is brand awareness of the credit unions and understanding what credit unions are. Second, I think, as I mentioned earlier, I fell into credit unions. A lot of people either grew up in credit unions because their families were in credit unions, or they fall into it. And so I would love to see credit unions market themselves as employers of choice. I want people to come out of college and say, I want to work in a credit union, or come out of high school and be like, I want to make a difference, and I can do that at a credit union, because they understand that they actually can. I mean, credit unions are already doing this stuff, but not enough people know it. And when we talk about the war for talent, right? Being able to keep people and keeping them engaged, when they feel good about their work, that the rest follows. Not only are they a good performer for you, but you can slow the turnover, and in positions even like the ones there where we see a lot of turnover, in the tellers and the MSRs. And then finally, like I mentioned earlier, something that's affordable for small business partners to especially connect with smaller credit unions, because I feel like smaller credit unions often need the extra resources, and the smaller business partners are typically the ones who are not going to tell you just go file a ticket. They're going to be the ones to help walk you through a process and hold your hand and make sure you understand where you're going and why you're going in that direction. So that's kind of, in a nutshell, more than a nutshell, a very large nutshell, what the Credit Union Connection's about.
Well, I love it. And I appreciate you giving us some of that backstory, because, as we kind of go through some of the topics that you and I wanted to talk about today, it's really that kind of like wide angle lens, I think, that you have through the Credit Union Connection that makes you a really interesting guest for me, right? Because it gives you really unique perspectives on all the different things that you're seeing happening in the industry. And, I'll give you the quick shout out here. It's one of the reasons why I've really loved making, your email newsletter is one of the things that every time I see that hit my inbox, that's one of the things I always stop and make sure I take a minute to look through. And this could just be a personal thing too, right? But it's how I like to consume content is, I subscribe to basically everything in our industry. Mm-hmm. And I'm going to be totally honest, I read very little of it. I just don't have the time to read every single one of these things, right? So I try and quickly skim through, see if there's something super important or relevant, to try and get an overall general vibe of what's happening, and then pick out things that, I really need to dive deeper into. And you kind of do that for me. Like, you kind of curate it, and you're like, oh, hey, here's kind of what's happening in advocacy. Here was a merger. Here was, a really cool product deployment from a software company. And here's some news from a credit union about something they started. And you kind of have like this holistic picture, but it's simplified down in the email blast. So I can really quickly just kind of see the hot topics, and then it's kind of a choose your own adventure, and I can dive as deep or as shallow as I want into that story. So yeah, I really appreciate that. But I think that was also one of the reasons why I really wanted to have you as a guest, is because, again, I think that gives you a really cool perspective at looking at like the journalistic side of what's happening in our industry, but also from the perspective of really wanting to market the industry as a whole. And that's both the financial institutions, but also the companies that support those financial institutions. And just kind of talking about your point from earlier, I think it is really cool to see how you're looking to put a focus on giving the right types of exposure through the Credit Union Connection, because it is, right? Like, there's some really cool things that are happening, between credit unions and vendors. And sometimes both of them are just on the smaller spectrum. And actually seeing that story be told is really, really cool. You know, I reference a podcast I did a ways back a lot of times when this topic comes up with Tracy Miller from Pioneer Credit Union. And like she touts that as one of her biggest, you know, reasons for success is she's like, I go look for the small players that don't have big marketing budgets. And I look for the diamonds in the rough. And then I look for ways that, you know, my small credit union can work a deal with them because they're still early and they're trying to get reference clients to get things that, you know, by the time this blows up and becomes huge, the big credit unions can't even afford, right? And so anyway, I know that's kind of a long-winded me selling your publication for you, but I'm a fan of just seeing more types of content, right? I mean, again, it's kind of the whole reason we started this podcast is I think this industry's superpower is collaboration. So it's cool to see a publication like yours focusing on that style of collaboration.
I think the collaboration isn't just the credit unions too. It's among the business partners. QSOs in particular, obviously, have a philosophy. What's the word I'm looking for? Words, Sarah. Have a foundation of collaboration, but also, you know, it doesn't matter. You don't have to be a collaborative organization or cooperative organization to collaborate too.
Well, so kind of one of the first things that I know you and I had touched on just as we were preparing is we really wanted to talk about I even made the joke, you know, I'll let my listeners decide if I talk about it too much, but just one of the kind of, to those of us that are like marketers, glaringly obvious areas of opportunity for the credit union industry is to be storytellers. And, you know, to your point from earlier, like the work that they're doing, it really actually is sometimes life-saving type of work, right? Like we're having massive impacts on people's like future trajectories in life, both of ours included, right? And so how do credit unions get out and tell the story to both attract new membership in a changing environment, but to attract talent? Right. You know, I think it's really interesting. Like I've had, as you were talking about that, two podcast guests that really came to mind. One is actually the one that just released with Ning Duong from Credit Union West out of Arizona. And she's telling me this story of like how they've built this culture there at the credit union of empowerment. And I'm like, hot dang, like if you're somebody coming out of college and you're hearing this podcast, there's no way you're not like, I want to work there. Like that sounds awesome. And then I had Adrian Quince from Redwood Credit Union on a while back, and he was talking about how, you know, they're in like Silicon Valley area, right? And they're trying to attract developer talent. And they're like, hey, I know you could take a job making $700,000 at Google. We'll pay you 1/10 of that to come work at a credit union, and we'll stifle all of your innovation. Like, how do you break that barrier to attract top talent from tech to come and do tech at the credit union? And he was talking about how they, you know, fostered that culture there at the credit union to be able to attract really top tier talent in tech. And so I think there's really a story to be told for credit unions on both sides. Like, how do you attract top talent? How do you attract members? So, you know, I'd love to get your take on this, as I know this is something you're really passionate about.
Yeah, absolutely. So we were talking earlier, I had been a volunteer at my credit union for the last 12 years. And I'm currently the vice chair. And in part that's because they saved my ass. You know, when I was, I don't know, late mid-20s, something like that, you know, got into some debt. The credit union, and I'm sure I don't think we applied anywhere else, but, you know, I am sure I wouldn't have lent me money. That's what I said to my husband. I was like, they're not going to lend, who would lend us money? But the credit union did. And it really, you know, reduced our payments. We were able to, you know, build our way out of that, build our credit back up. So yeah, I mean, I definitely believe the credit union, you know, saved us financially, but also, like you mentioned, money is sticky between people and in relationships. And so, you know, there's the whole part of like, whether you're a couple or just individually, you know, you don't act like you when you're super freaking stressed out over money, right? You become I become a beast. But so, yeah, I mean, there are so many emotions tied around money.
Yeah.
And we just, But as we were talking earlier, you see so much credit union marketing, like with the giant percentage, 199 car rate or, 599, savings rate, whatever it is, when there is so much more story to tell. And I think, part of the issue is that a lot of credit unions just don't even realize they're doing something extraordinary. It's what they do every day, right? You're talking, I mean, just that introduction of me, I was like, wow, that makes me sound so cool, and I'm not. But, credit unions have these millions collectively of stories. I've talked to credit unions that have, they're working with the city government to try to figure out ways to eliminate debt for people who are dying of cancer. They are, people who are about to be released from prison, and they're providing financial education, job training, getting them bus path to their job. And then, one of the most critical things the CEO was telling me is that when people are released from prison, they go back to that same environment that was not good for them. And so this credit union, she shared the story of how they helped him get this job. And this gentleman ended up becoming manager of like this t-shirt shop and got his first mortgage from that credit union after, a few years of saving and doing what he needed to do because of the credit union guidance. And if that's not life-saving, life-changing, I don't know what is. So there are millions of stories like that we need to get out there because, one, I think it'll engage members much better than saying, look at my CD rate. But also because the CD rate it's cocaine advertising. It was what I'm like clients would say, it's like you're going to get that quick shot, that quick hit, but it's not building a brand. It's not building, your legacy, your credit union's legacy as a pillar of the community. And that's really where people miss. I mean, I see it time and again in my consulting business too, is, I need leads. It's like, well, why would anybody come work with you if they don't even know who you are? When you date, you got to get to know somebody, you got to learn to trust them. And then, you go out. It's not a quick one and done thing. And that's where I think a lot of credit unions also miss the boat, in addition to not even recognizing that what they're doing is extraordinary. And also on your other point, as employers, I mean, we're constantly, for at least 5 years now, been talking about the war for talent. And for at least 10 years now, we've been watching all these retirements in the C-suite at the credit unions. And one of the things I hear from the executive recruiters is there aren't people well-rounded enough. There aren't people who have the experience. There aren't enough people who, whatever it is, to backfill these positions. And so, we're losing a lot of great talent and people who have this legacy knowledge that needs to be passed down, needs to be shared. We also need to have people prepared to come up in their place. So I think, having people who are dedicated to an organization, not because they got to sell their next loan or whatever, but dedicated because they actually feel good about what they're doing. Because, I can't remember, we've all read the stats about the majority of people are disengaged at work. Well, if you make them feel like they're bigger, something bigger than themselves, Maslow's hierarchy, that highest level is being a part of something bigger than yourself and giving back. And so I feel like, credit unions have, I'm giving myself goosebumps. This is really nerdy. But credit unions have so much to give and so much to share, and they just don't know how to do it sometimes.
Yeah, that is, it's like side note, one of my absolute favorite programs, and you see this all over, right? And we were talking about this earlier. We're about to head into GAC this weekend, and you'll see it at GAC. But one of my favorite programs is the Y-Cup program, right? Mm-hmm. And the young credit union professionals, and just getting an opportunity to see this next generation of leaders getting excited and passionate. Like, those are the types of things that I really love seeing get built up. Mm-hmm. Our local Y-Cup does a super cool event every year. It's a CEO roundtable, and it's CEO speed dating. It's hilarious. They get like 10-ish CEOs from, different credit unions around the area. They put one of them at each of these 10 tables, and then they put 10 or so young credit union professionals at the table. And then every 15 minutes, the CEOs rotate until you've met with every one of the CEOs. And it's total open forum. Anyone at the table can ask anything they want of the CEO, but it's really a lot of times, driven towards the thought process of like, how should we be thinking about setting ourselves up to be an awesome next generation of leaders for this credit union? And it's both so cool to see the excitement on, the Y Cup side, but it's also really cool to see the excitement from the executives, right? And seeing them really want to, like you were saying, like pass down some of this legacy knowledge, but at the same time, like foster a spirit of bringing new ideas and new thoughts and new concepts. And, again, I want to kind of get your take on this, both from kind of the consulting standpoint and too, just like looking at our industry. But it's when you were talking about the marketing side of things, like how we used to do things is not how we do things anymore. Like we just have to call it very bluntly. We live in a very digital age and so many things are changing. Everything from how we're actually delivering our products and services to building our relationships, but to also how we're marketing ourselves, right? And so it's really important to bring in this next generation of talent to think differently, to challenge the status quo, and to kind of reinvent how we put credit unions on the map so that it resonates with the group that we're trying to attract, right?
Mm-hmm. Yeah, no, and just to draw a parallel to journalism, like I said, when I started in 1999, I cut my teeth on Y2K, and I, was helping my publication at the time to build their first website. And when you think about that, when I had a Motorola Q, yeah, remember that? There was no iPhone, there was no TikTok, there was a lot of things changed, and after I joined the Times, we had this website. They already had a website, but they didn't know how to charge for it. We're charging like classified ad rates, at the time. And then how do you build that into a business? And it can't just be, and this is the same thing I think with credit unions as well. It can't just be putting what used to be in print onto a website now. A lot of credit unions, obviously, we'll start in publishing, in the financial services in 2008, we got slammed hard, right? We had our COVID moment, I guess, because there was overall the housing crisis and the economic crisis, but within the credit union market, the corporate credit unions were the largest segment of our advertisers, gone overnight, right? And so being forced to adapt and change because of the new reality, a lot of times we need to get ahead of that. Like Credit Union Times, we were the first publication on social media, on Facebook and Twitter. And back when Twitter, it was just me and like 5 other credit union people tweeting back and forth to each other. And we, adapting, seeing what's coming and adapting before you're forced to. I mean, now, you see experiences like in the credit condition, we're trying to do multimedia because we don't want to be just take the thing from print and put it on the web. And that's the same for credit unions as well. The experience of waiting in a line and having the bulletproof glass in front of your face, dividing you from the person, is not what you want to put online, because especially online, you have to work a little differently, work a little harder to make that virtual connection with people, to build a brand that is very different from, the way it was traditionally done. And of course, COVID kind of forced a lot of that, digital signing of mortgages and things like that should have been happening well before then. And, you see a lot of credit unions where, for example, my credit union, we were the first to have a online banking, first credit union in the nation, as well as it was us and Bank of America and maybe Chase or something like that back in, I don't know, it was a long time. It was before my time on the board. So that was really a great move, because our field of membership in particular was the applied physics lab at Johns Hopkins. And so, it was a lot of engineers and technology folks. So, it was a great move, but then you rest on your laurels, it's like, oh, we had the first thing, but what about the next thing? And I think it's like, always looking for something different, always staying, you kind of said, hungry, always moving forward. And I mean, I think being competitive has helped me a lot in life, as you said. But I think one of the thing is I tend to, when I'm talking about being competitive, 90% of what I'm talking about is being better than I was the day before. I don't really compare myself to other people as being better at whatever it is than I was the day before. Because I think when you're watching leaders, you become a follower. It's just what it is. So anyway.
No, that's a really good point. And, kind of to what you were just saying, I think this is going to sound really obvious when I say it out loud, but it is amazing how, even myself can be guilty of this at times. Like it's so obvious, but sometimes we don't actually live it in practice, is that, innovation can't be a destination. It has to be a journey, and it has to be a continuous journey, right? And it's not like our industry is unique in this, right? We're talking about how credit unions are having to navigate this whole, move to the digital world and not just trying to copy and paste. And I mean, I just had a couple of episodes ago, Sanjeev Kalita from FinTech Meetup on, and just talking about how, conferences, even as a whole, all of a sudden you have a pandemic that says you cannot be near other humans. And you're like, oh, my entire business model is putting humans near other humans. Crap. Like, what do I do now?
Yeah.
Right. So like,
I attended the FinTech Meetup online before it went in person. Yeah.
Oh, yeah.
It was very, yeah.
Because it was thought about totally differently, right? It wasn't just, we're going to take, I mean, no offense, I'm not going to use any specific names, but I mean, it was amazing to watch how many conferences were like, okay, vendors, you used to have a booth. Now you have a virtual booth, and people will stop by your virtual booth. I'm like, no one in their right mind is stopping by my virtual booth. Like, my ROI is like -5 on this. It's ridiculous. Like, no way. It's not that our industry is necessarily unique in this. And it's not even just that, we use COVID and the pandemic as a really big example and catalyst for a lot of these changes, but that's just one of many examples of businesses are constantly being challenged, right? Ways of doing business is constantly being challenged. And you can't, like you said, just rest on your laurels and be like, hey, we launched internet banking first, so we're good for forever. Right?
Yeah.
Like, it just doesn't work like that. And sometimes there are small incremental things that happen that force us to have to kind of start thinking about evolution, or there's major events. But in kind of either of those instances, you can't be the frog in the pot of water analogy, right? You can't just slowly be like, we're totally fine. We're totally fine. We're totally fine. We did the first internet banking. Oh crap, we're completely irrelevant. We've been boiled, right? And you were talking about how even there's kind of this, I don't want to say misconception, but almost just negative narrative that's floating around both within and outside of our industry, that like small credit unions don't even need to exist anymore. Like, they're irrelevant and they can't keep up. And so what's the point? And we should just merge them all into bigger credit unions, simplify the field of players, and then just go from there. There's no point to them. But I think you have a pretty strong opinion on the opposition to that.
Well, I think there's a lot of different reasons. I think we got to look at the reasons for mergers, and if I may, I'll mention actually a competitor, Frank Diekman's doing an excellent job covering the credit union mergers at CU Today. The reasons are just pathetic most of the time of why mergers are happening. They claim there's expanded resources. Almost all of them say expanded resources, better ability to serve the membership, or like they can't find a new CEO, or they can't find a new volunteer. Whatever it is, and it's just, I feel like there is a need at times for fresher blood, for people who, okay, you don't feel like you can continue to lead the credit union to survive, but that doesn't mean it can't survive. And so part of it, I think, there is some ego there. There is some, I'm retiring and I don't feel like putting up with any more stuff, which, I mean, I kind of can get. understand that attitude, but it's bigger than yourself, or,
Yeah.
a lot of, you say you're the CEO of a $50 million credit union that serves postal workers. You're not going to make more than 60,000 a year to run this credit union. It's a real pain in the rear, honestly, because you're at that size. You're also the loan officer. You're also a teller on Fridays when everybody else is off. It's like, it's a big job. And, a lot of times boards hold back regarding compensation and in particular benefits packages for the seniors executives. And so, it seems to me obvious or logical that, then the incentive becomes, oh, this guy wants to merge and take all my capital, take my members' capital, but I get, this payout for my retirement fund. Hell yeah. I think we got to take into consideration how we treat our executives, how we train our executives, and keep them, as well as board members, keep them, educated and evolving with the times, as you said, and recognizing that sometimes, I'm leaving my board after 12 years now because I'm moving, and is a large part of it. But also, I think, 12 years is probably long enough for me to have made the changes that I wanted to, and I think I'm leaving in good hands. So being confident and taking some of the ego out of it, I think is part of it for sure. And then I think, the large part of it is overregulation. I think, especially in the current environment, you're looking at the CFPB calling everything junk fees. When, somebody is late on their credit card payment, you are providing a service by extending that credit to them, for the, counting on them making that next payment. If somebody is, overdrafting their account, that is a service you are providing them that costs the institution money. And especially with a credit union, it's your fellow members' money. So, calling that junk, I think, is BS. Some certainly go overboard with it. I'm not going to say it's done 100% right, but we can't regulate morality. And the free market only works with ethical business decisions. Unfortunately, not everybody can do that. In my utopia, they do. But and you're seeing it with the legislation currently that Durbin's pushing yet again to limit credit card interchange income, which, helps pay for all the fraud that is going on with our credit cards, especially the card not presence fraud from the increase in online purchasing. And so there's just a lot of reasons, that a small credit union should feel under pressure, but there's also things that should change, that could change if we really, I feel like, set our minds to it. But I am the type of person who likes to bang their head against the wall 50 times. So, yeah, that was a lot, but.
No, I want to come back to what you were talking about on the regulation side, because I think there's a lot of conversation there. But going back even a little bit further, you were talking about just thinking about how do we kind of incentivize the current leadership at credit unions and the next generation of leadership at credit unions. And it got me thinking, very long story short, but like my wife and I started a foundation at one point. And, one of the things that we really originally hung our hats on was like, we wanted the highest percentage physically possible of money that was donated to go to the actual cause that we were trying to support versus administration costs or us taking a salary or something like that. Right. And one of the reasons that kind of got me on that track is I remember long, long ago, and I'm sure I'll misquote it, so I won't use any specific organizations' names, but I remember an article coming out that was highlighting the compensation packages of some of the executives at some of the biggest not-for-profits that you're aware of, right? And some of these people are making $50 million a year with a stipend for, a $200 million penthouse in New York and 4 Rolls Royces wherever they go. And you're like, do I really want to give money to that charity if that's where that's going? But on the flip side, and I think where the conversation we're talking about credit unions is going, right, is conversely, if we say, hey, look, I have this job offer for you. You're going to be the CEO of a credit union. You're going to work ridiculously long hours. You're going to get a lot of negative feedback from members and board and face all these challenges for the occasional story that you help save somebody's life financially. You're going to wear lots of hats. You're going to do it for a lot of years. And we're going to give you $27 and a half of a hot dog for lunch every other week. you're like, screw that. Like, that sounds like a terrible job. I'm not going to do that. Right. So how are you going to attract top talent to create a high producing credit union, right? That's financially solid. And then conversely, a financially solid institution with the right type of leadership who's bringing in the right roles and cultivating a good, culture and brand at that credit union is going to have lots of stories like yours and mine of the positive impacts they're going to do for people. So if all of these credit unions start going away because we're not incentivizing leadership to really evolve and innovate and, take risks, then they're not going to be around to have stories like you and I. And our story is going to turn into some big bank turned me down for that loan. And my husband and I had a giant blow up about money and we got a divorce, right? Like, I'm not saying that, I'm just saying, but that's what we're talking about here is making sure that we're making these financial institutions attractive places for people to be, thinking about comp plans, thinking about, all the things that go into building a high performing team. And sometimes that does feel like dirty to us. We're like, no, we're not for profit. Like, yeah, well, we're not for profit, but we can't go under either, right? Like if we're operating at a loss, we're not doing any good. We're not doing the good that our mission is set out to do. So that is a really fine balance, I think. But I think your point is really spot on, Sarah.
Yeah. If you're not innovating, whether it's how you find talent, how you train talent, how you market, how you build the platform that is your credit union, if you're not innovating that, then you're not serving anybody's purpose. And that is a bigger risk. Not doing anything is a bigger risk. And that's one of the things I think a lot of people are like, well, if I just don't do anything, nothing will change. And that's, nothing will change.
But the environment around you is going to change, right?
Exactly.
And the game is going to change. You've been doing really good playing volleyball forever, but we've switched up. We're playing football now. And like your volleyball tactics aren't going to work great on the football field, right?
I got a hell of a spiral though. But, and back to your point too, about what you were saying about YCUP and the GAC crashers and groups like that, these folks go and they see all these exciting things at the GAC and they get inspired by Herb Wegner dinner. Oh my God. That is like, I want to be the person who is able to do the work enough to possibly maybe one day get one of those awards just because I want to say I did the work for it. But anyway, just amazing stories there. Again, the great storytelling in that. We can tell ourselves our stories all day long. That's a whole other issue. But with these younger groups that go out and have these great experiences and they come back to their credit union and they're told no all the time, then they're going to be like, what the hell? I mean, it almost makes it almost could make it worse when you go to a GAC and you hear all these inspiring speakers and innovators, and then you go back to your own credit union and it's like, no, we can't do that because X. There's always a reason why no. And it's just, I don't know.
I really wish I could pull the stat out of the top of my head right now, but I can't for the life of me remember the reference or the number. So I'll be careful about how I quote it. But I think it was a recent podcast guest, Bill Kennedy, and I were talking about, and I don't know if he actually said it on air or if it was just a conversation between him and I, but the number of GAC crashers that leave the credit union, and not just leave the credit union, leave the industry, is staggering. Like it's when I heard whatever the stat was, I remember being shocked. I remember being like, wait, no way. Like we put so much hype into this, and you see these groups like YCUP doing this. So what's happening? Where's the disconnect? What's happening, like you said, when they go home?
Yep, that is exactly, I think, what is scary. So, it's kind of like when you're not going to market your credit union if you can't do the things that you say you're going to do, right? So don't market your industry as being able to do things that you're not going to be able to do. So is it more a matter of setting that foundation, building the innovation and the education and the training for the people who've been around a while versus people who have not and think there still is opportunity, and there is, and there should be. But then, the people whom they have to report to can dash that in a heartbeat. And again, I think some of that goes back to, I'm about to retire. I don't want to bother with converting to a different core or a different mobile banking platform or whatever it is. Or, and so there are, and there are limitations too that I think that business partners are sometimes responsible for as well. There are some of the larger companies that might, they build one thing and they do it really well, but then they build this on top of it and this beside it and this around it. And these are okay, but but they'll give you the package deal. And if you don't take the package deal, they're going to charge you out the wazoo to add another different third party in. And so, that kind of ham-fisted control can stifle the innovation as well. There truly is nothing some credit unions can do because of some of the business partners that are out there that aren't so much partners.
No, I think, that's a good point too, Sarah, that we're starting to see, I think, some of the value in, moving more towards open banking, standards-based banking will hopefully have some pretty significant impacts on that, right? It's really hard to have a walled garden in an open ecosystem, right? And all of a sudden you kind of start to stand out and have to make some very different business decisions. But, being able for credit unions to say, hey, I want to be able to have best in breed in all of these things and actually be able to pull it off, because when things are standards based and open, it's significantly lower lift and lower cost to do integrations to those types of things. I think I see definitely a positive future in terms of kind of that evolution that's happening.
I think, I don't know. Open banking scares me a little bit. I've talked to some credit union leaders in Australia who already have it. They're probably 10 years ahead of the US in that. And I think England as well. But yeah, I mean, it's a little scary because we've always known how to compete, I guess, in the way that we have been competing, if that makes sense. But when you have open banking and it's easy to switch from one institution to another or share your information from one institution to another, there's going to be open a whole different world for competitively speaking. And hopefully it's not just about rates.
Well, and that's a great point too, right? That's why this again becomes so incredibly important that we as an industry start to rethink how we do our marketing and our messaging. And it comes really back to, you've got to tell a why story, not a what story to consumers. And, the other thing, I don't know if how far we want to go down this rabbit trail, but, I think my hope too is that the US looks at other examples of how open banking has been instituted, right? And, you look at things like whether the government creates the standard and the API, or whether they just mandate a standard be made and let the free market decide what that looks like. And all of those factors have a really big impact on what that actually means for the financial institutions. And so I think this is where also having credit union advocacy is so incredibly important, is because if we don't have a voice in that, we all know what's going to happen, right? Like if you don't have a seat at the table, there will be no table for you anymore. So you have to be a part of those conversations to make sure that your voices are heard. And you've got to be able to articulate your story of like, this is why we deserve to have a seat at the table. This is the good that we're doing in our communities, that we're doing for our membership base, right? And this is how we're differentiating ourselves. You were talking about just a minute ago, kind of the storytelling and the marketing of that, and how you have to start thinking about things differently and encouraging like this next generation of leaders to come in and be like empowered to actually do things without being told no. And, we've been talking about maybe some of the negative examples of just not telling our story well, but mark my words, I'm going to get this guy to be a guest on the podcast one of these days. He's probably just too busy and too cool for me, but Stephen Foster of Frontier Credit Union out of Idaho came from outside the industry, got connected to this credit union in Idaho, and they were like, hey, we want you to come run marketing for us. And he kind of was like, no, I know what you're going to do. Like, you're going to kill all my ideas. Not a chance. And they were like, what if we told you yes to all your ideas? Obviously with some guardrails and some reason, right? And he goes, fine. Like if you really and truly let me run this like a marketing organization, not like a credit union, I'm in. Right. And I just pulled up while you were talking an email from him from 2022 where he sent me some stats. And in 2022, they had just the ones that he referenced, over 10 TikTok videos with over 500,000 views, and some of them in the 20 and 30,000 likes, comments, shares. Like, I'm just going to say this super blunt. If you're in marketing at a credit union, how many of you can say you've got that? Right?
I would.
It's pretty low.
I was going to say, if any others.
Yeah.
I've seen some bad TikTok from credit unions.
But it shows there's opportunity, right? And I think that's what you're alluding to. Is like, we know there's opportunity. Like, we know people are craving for this story because they're craving to do business with organizations that can be a part of their story.
Mm-hmm. Yes, I think there's a lot of innovation that could happen within credit unions, and especially the smaller ones, honestly. People diss on the small ones. They say they're irrelevant. The thing is, these smaller credit unions are the ones that know their members better than anybody else. And it's not, it's truly seeing them face to face is a lot of it. I think if we could help them in some way on the digital side, on the virtual side, they could be, extreme powerhouses, especially for storytelling. I mean, they're the ones that, have the stories of, this one guy who, and this is a real story I got from a credit union, this guy who was a landscaper, had his equipment stolen on off his truck. And he called, he literally had the CEO of the credit union hands out her cell phone to all the members. And he called her cell phone, and I think this was on a Saturday, and by Monday, she had given him a loan, helped him get the equipment back, or new equipment. And so he didn't lose any income. He was able to go to work, and he paid back the loan. He also she taught him how to apply for business loans, how to form an LLC, how to do, the things that, her point was he was really smart. He just didn't know exactly what to do.
Yeah.
And so, like, because of this one problem he had, she built this relationship with him and his business, and now his couple of employees and his family. And like, he's talking all about that. Word of mouth is very powerful, but how can credit unions learn to do it more at scale? It is, I think, one of the bigger issues that we need to solve for the world.
I mean, if you ask me, you hit the nail right on the head, right? Like, how do you do that at scale? And I would argue it's virtually impossible, right? Now, we can get really, really good. When we start looking at, and again, this is kind of what you were, I think, talking a little bit about, just, sometimes we see the issues in innovation and technology from our industry. Sometimes it's like, well, I don't want to deal with another conversion, or what we have is just fine. But when we really look at, okay, how do we continue to take this relational approach to a digital world? Like, things like digital banking have to evolve. Right now, digital banking is a look back. It's just tell me what happened across my accounts, right? The look forward is maybe, here's the bills you have upcoming due. But how do we start being a lot more proactive about what you were saying, right? Educating, setting people up for success, putting tools in front of them, because even really intelligent people sometimes don't know what to do because this isn't their forte, right? I talk to doctors who are morons with their money. Yes. They make $700,000 a year, and they're total idiots with their money, and they're living paycheck to paycheck, making $700,000 a year, right? So very smart people can just be very smart in different areas of their life. Mm-hmm. And so we need to start looking at how can technology start to bridge that gap. So yes, technology is going to help us if we evolve and innovate and allow that innovation to happen within our industry so that we can scale some of this relational. But I think this does come back to what you kind of were talking about with, this notion that small credit unions don't have a place in this world. This is why I would argue they absolutely do. They have to exist. They fundamentally have to exist, because I had Austin Adams, the former CIO of JP Morgan Chase, as a guest on the podcast. And he was like, hey, look, I'm going to tell you totally honest. Like, Chase has no bloody clue who you are as a consumer. Like, we have no clue. None whatsoever. Like, sorry. Like, well, we'll talk about all this, but we have no clue who you are. Right. But that 5,000 member credit union, they know absolutely who you are. Right. And they're the type of ones that be like, look, on paper, we should not give Sarah this money. This is a bad idea. But I know Sarah, like, and I know the situation, and I know the surrounding elements, and I know that if I take a vested interest in ensuring that she pays this back, I'm going to then set her credit score up for better success for next time. So next time, even on paper, she's even better, right? That can't happen really, truly at scale. Again, we're getting better at this. Technology is helping to solve some of these things, but there are some things that are just different when you have a real relationship with people on that human level. And so I think that's part of my argument for, like, this is why it's so important for small credit unions to stay around.
Yeah, and I think too, one of the things you touched on is, one, technology cannot replace people. I mean, I had a friend talk to me about, I'm worried about your business because AI can just write press releases. AI can just do this or that. But AI doesn't have the relationships that I have with, the editors that I know at the different publications. So, I mean, it's about that human element. And one of my concerns is since COVID, it's been really interesting. Since COVID, one of the things I hear pretty frequently is that credit unions are actually being more innovative than the community bank side, which I think is really interesting. One of my concerns is, are we going to try to move too fast? I think everybody talks AI. And we got to add AI. I mean, it was a topic at my credit union strategic board meeting, strategic planning session over a few weekends ago. But it's about, and this is the key word that you said, solve. It's got to solve something. We have to have AI. We have to have AI. It's like, what is the point? What the why is always the most important thing. And that's what they teach you in journalism too. So.
Yeah, no, I love that comment too, Sarah. It is so incredibly important for us. I think one of the really blatant examples that I use, that I had lots of conversations, and funny enough, it was some of these conversations that like prompted me to start this podcast, because I ended up having these super fascinating conversations with my customers, and then going back and telling my team, and they were like, dude, we want to listen in on this anyway, but was around crypto, right? And I remember when all of a sudden, Bitcoin is through the roof, a lot of our credit unions are like, we have to do Bitcoin. We have to do buy, sell, hold of crypto. And I was like, why? Because it's in the news. Why do you have to do this? Like, what is and you got to go layers deep into this, right? And understand, well, why would you not only do this, but why would you prioritize this over something else, right? And for some, maybe it did mean that, yes, doing buy, sell, hold of crypto was the right thing. But I'll tell you, across the board, for most, it wasn't the right thing, right? And they came to that realization when they started to ask themselves, like, why? What is the value add for my membership? And specifically around, what is the value add of me doing this versus me prioritizing my efforts and doing something else for them, right?
No, it's sort of like Warren Buffett too. Oh, go ahead.
Oh, no. Yeah, go ahead.
No, I was going to say, sort of like Warren Buffett, don't get into things that you don't understand what they are. I remember talking to a group of credit union people about blockchain. And I was saying, it's not about Bitcoin. It's not about, Coinbase, whatever it was. It's about the underlying technology of blockchain and what that's going to do, because you'll be able to, ratify contracts faster, fewer fraud, all this stuff. And they're like, no, we're not getting into Bitcoin. That's what they kept saying. I'm like, you got to educate yourselves. Know what you don't know. Put your ego aside. I don't know a lot about it. I am not a tech person per se, but I understand what it can do for a credit union, for example.
Yeah, I think that's a good point. I would be really careful with my words here, but I think we see a lot of that. And again, I'm not painting the picture against just our credit union executives, right? Like, I'm guilty of this. I'm sure you're guilty of it. Like, we're all guilty of this.
The whole everybody.
Of like, we don't understand something, so we put our walls up against it, right? And especially when something's new and really touted as like something revolutionary, I think we kind of see two camps of people. People are like, I'm going to dig really deep in and understand why this is revolutionary and then make my decision. Or, holy crap, this is so big and huge, and I just don't know where to touch it, and I don't know where to start, and I don't know what I don't know. And so therefore, I'm just going to fall back on doing things how I've always done things, right? And I think the very recent example of that has been what we've seen in just some of the stuff with FedNow, right? I think there's a lot of people that are like, oh my gosh, I mean, this is a completely radically different way to move money in the US. And it was the one missing puzzle piece in money movement. Like, I got to jump on this. And then a lot of people are like, I just don't understand. Like, why do we need another money movement? And there's lots of questions. So this is not an isolated problem, right? Like, we see this time and time again. And I think kind of what you're talking about is like, we have to create this culture and this spirit, especially within our leadership team, of being hungry for the information, looking at it. And then it's not just whatever, Bitcoin or blockchain or AI or FedNow or whatever the next thing is, and just deciding, am I getting on the train? It's no, I really fundamentally understand my field of membership, who we serve, what's of value to them. And then if I do this, what problem is it solving for them or for us to be able to better serve them? And what's the overall value add and the impact that it's going to have, as opposed to just, hey, if I walk down the aisle at GAC in the trade show hall, you know, every other company has .ai at the back of their name now. Like, we have to have an AI for our credit union. You're like, yeah, okay, what does that mean?
Yeah. Yeah, for sure. And oh goodness, I just lost my train of thought. It went off the tracks. But I think a lot of people too, to the positive, is that innovation is not just technology or creativity for the sake of itself. It's that creates value. And that's one of the words you use too. It has to create value, whether it's monetary or time savings or, whatever. It doesn't even have to be specifically and very directly measurable. But innovation is not just getting creative with some funky technology. It's got to create value too. So yeah, I think that's the bottom line.
I want to come, I kind of put a pin in this on you earlier, and I want to come back to it. Is I think one of the other big elephants in the room when we've talked about all these things is the role that regulation plays in this, right? And for the positive and the negative, right? There's the protection aspect of it, but then there's also the stunting of innovation aspect. So as you've been kind of like, that's been your world for a lot longer than mine. Like, what's your perception of kind of the state of regulation and where we've been and where we're headed, and kind of what are the impacts of that for our industry?
I've been registered as a Democrat since I was 18 or whatever. Remember, I think it was Clinton's second term. And the state of the political parties, and I hate to talk about the political parties per se, just because there's more to politics than the parties, but then they have such control, there hardly is anything more than the parties. I'm big for a multi-party system. But because the parties have so much control, they tend to go to extremes. And because the media loves the sound bites, then they go to more extremes when, 10% of people are here, 10% of people are here, 80% of people are here. But then these are the ones who get you can't see my arms, but the ones at either end are the ones who get the mic because they're saying something that's like obnoxious usually. And so I feel like the current administration is not just the current administration. It's been a good while for on both sides of the aisle where they get obnoxious, they make their point, but then they over make their point. For example, we talked a little bit about the CFPB and the junk fees and the CFPB. And another one that has made a lot of news this year, which I don't think it ever has in the past, is the CDFI fund, the Community Development Financial Institution Fund. I think both parties are trying to do things that are good. For example, the CDFI fund was trying to protect the legacy and the brand of what it means to be a community development financial institution. The way they were going about it, however, in changing their application process, the way they were going about it was basically going to eliminate almost all credit unions. And so from being CDFIs, when credit unions are the ones making the most loans of all the community development financial institutions. And so, just being aware of the practical effects. Everybody talks about, oh, well, this had unintended consequences. But BS, if you listen to anybody who actually does the work, you would know you would know that that is going to be the consequence of it. And obviously, the trade associations, and of course we had the big merger this year, which is a whole other thing about smaller credit unions. But anyway, the trade associations can only, and I'm going to get back to storytelling, the trade associations can only do so much. They can gather this data that is really eye-opening, and they can, lobby the Hill, but they're lobbyists. When real credit union people, real credit union executives and board members go to the Hill or go to their state house or, talk to their regulators with the real stories of how the practical impact of every day, it is so important to share that story of how you won't be able to make me that loan if this regulation goes through, or I can't afford to innovate if I also have to pay this much for cybersecurity. And so I think recognizing the practical impact of what you're trying to regulate is super, super important. And I just feel like the current administration has lost its way in that regard and doing the opposite of what it actually intends to do. But it's my 2 cents.
I love it. I mean, I really couldn't agree more. I think this is why I think this time of year is also really exciting for people and really should be used to kind of re-energize some of us and, energize kind of this next generation. It's why I'm such a big fan of the Crashers, but, I'd like to see what happens to why that attrition is happening. But it is GAC, right? And it is hiking the hill, and it is going out, and it is really putting our faces in front of, the folks passing down, these regulations and this legislation and saying, these are the real world impacts. And, our stories are really powerful. And it's kind of funny. I don't think we ever really intended this podcast to be about this, but I think the common theme here is just stories, right? Like, I know it sounds all fluff and stuff, kumbaya, and it's not as hard hitting as my CD rate is higher than their CD rate. It's not as objective, but it really is the things that make the difference, right? It's the stories come from the stories of real people and the impacts credit unions are having for them. And then it's marketing that story that's helping to create the next generation of both internal development and external development in bringing up our next generation of innovative leaders who are then in turn going to innovate, bring new ideas and solutions to solve new problems, to bring in the next generation of membership, and then making sure that that story is collated and told in an eloquent manner to the powers that be to make sure that our ability to do the good that we do is protected. But it is, I think we see it all the time, right? In the good and the bad of the double-edged sword of regulation and how it does provide some levels of protection, but at the same time, how, sometimes it stunts the innovation. So it's definitely a challenge for credit unions to navigate.
Yeah, we just saw the CFPB start going after its first non-bank lender. And so, which is really where they could focus a little more on the predatory lenders rather than those who already have the primary regulators. But
yeah.
Anyway.
Yeah, but I kind of too, this comes back to what you were talking about with just the whole idea of comp plans for executives at financial institutions, right? And specifically credit unions is, similarly, it's things like labeling all of these fees as negative and bad. And it's like, hey, look, there's payday lenders out there that are giving 300% interest loans on your freaking paycheck. Like, knock it the hell off about a couple dollar fee because somebody knowingly and, given all the tools and support and all of the options to make the right decision, still made a wrong decision, and it cost us money, and we have to figure out a way to absorb that. Like, yes, again, like, there are fees that are bad fees, and I totally agree, and they should go away, and they are against our mission and our why statement. But they're also things that protect our business. And, look, as a new parent, like I love seeing all the, it's funny to watch your like social media suggestions change as your phases of life go through. And now it's all like all the memes of like other parents in my age, like of children's stage. And like, you're like, oh yeah, no, I totally get that too. It's like, that I want to gentle parent you, but sometimes you just need to hear like, no, this is unacceptable. This is not okay behavior. Like, I'm not just going to coddle this, right? And it's like, we almost have to do the same thing with our membership, right? There's a very big difference between, what we think is compassion sometimes and what's actually just enabling bad behavior. And how do we balance that through things like fees so that it, sets a precedence for the bad behavior, but also there's avenues to help support people through those. And it helps us to maintain a viable business model. So like we were saying earlier, like you're still actually around to do the good that you want to do.
Yeah. Yeah. And it's about personal responsibility. Why did we give up on that? Like, one of the things the CFPB said, I think it was the CFPB, was talking about surprise fees. Overdrafts are not a surprise, especially they were saying, oh, well, people had done multiple overdrafts and it was a surprise. Well, they did multiple overdrafts. It's not a surprise at some point. And secondly, the other point the CFPB made was that they made these overdrafts when they had other less expensive forms of credit. Okay, use them. Like, you have to have some responsibility. We can't, we're going to end up, if we continue down this path, we will end up in like a 1984 situation. It's going to be bad. So,
oh, no, go ahead. Sorry. Finish.
I was going to say, being a presidential election year, the Democrats are currently in control. And so while their current candidate is not looking so strong, they're going to try to rush a bunch of stuff through before they have to get out the door. And if the Democrats do win again in the White House and in the Senate and Congress, and then, of course, the regulators come from those. But if the Democrats win again, they're just that much farther ahead. But if they don't, then they got all this stuff in place already. So it'd be interesting to see what happens in the next several months.
That is a really real fear for me, is just how some of the outside forces outside of our control, kind of coupled with the unfortunate truth that there is a large enough percentage of the population of our industry that is just content to do things the way they've always done them. Like, those two things combined are going to make it really hard for, credit unions to stay viable businesses, and especially some of these smaller ones. And, again, I want to reiterate my point, because I'm sounding like a doomsdayer about it, but that's not what I want. I want my personal little credit union that I sit on the board of, I want them around. Why? Because they know my community. They know their members, and they absolutely know, just like, the story you were telling, they can reach out to the CEO and he's going to know who they are and he's going to understand their situation, and that can't really and truly be done at scale. So, you need all of the flavors. You need the for-profit side, you need the not-for-profit side. They both bring different strengths, and they create a competitive environment that spurns innovation. And then you need, even within both of those, you need the big and the small. And we need this kind of flavor just because of even how much of a melting pot America is compared to a lot of other countries. We need that to really truly support people who they are, where they are, with what they need, with things that actually provide value in their lives.
And if we're not,
my fear is that we're going to make it hard for them to stay viable if we keep doing this.
If we're not storytelling, somebody else is telling our story. And things like what's going on at Navy Federal right now make the headlines. Things like when ViStar's mobile banking went down for a month, that made headlines. If we aren't, I was doing a project at one point. I was researching 36 credit unions, looking into the community work they did, and we knew they were doing this great community work. There were, of those, probably 6 of them, half dozen of them, had no trace of it in their social media, no trace of it on their website, no trace of it, nothing. So I had to Google them. And when I Googled these credit unions, all that came up were the robberies at their branches. That is not a story, what you want to come up when somebody Googles your credit union's name. So you got to be storytelling, or else somebody else don't for you. Yeah,
that's a super good point. No, it's so true, right? The story is going to get told. You might want to try and influence it. And like we were saying, it is really funny to me how I think there's kind of two major factors, I think, that keep credit unions. And this is just my own humble personal opinion, just fair asterisk on this sucker. There's 2 major things that keep our credit unions from going out there and telling these stories and doing it really, really successfully in terms of a marketing strategy. One is that, like you were saying, they don't actually think it's special. They're like, no, this is just what we do. Like, this is just normal for us. I'm like, I know it's normal for you, but it ain't normal for the rest of the world. Like, this is really good human work that's being done. Like, and people want to see that. And I think the other thing is that, again, because of the types of cultures that are, being built and the types of people that are attracted to the credit union motto and mission is really, centered around humility. And so they don't want to come across like, we cleaned up the park because we need more members, right? They're like, no, we just cleaned up the park because we actually care. I'm like, I know, but still, just because you're not trying to tell the story, for a purpose or a very specific ROI reason, it doesn't mean that you shouldn't still tell the story. Because I hate to break it to you, but it is going to turn into an ROI when you do get new members out of it, because people are like, oh man, that's super awesome. Like, I really need somebody to be in my corner when it comes to my personal financial life. And I'd like that to be somebody who's committed and rooted in my community and knows my fellow peers. And like, oh, look at this credit union just cleaned up my local park. Like, that's pretty dope. Right. So, but it is cool when you do see the folks that do tell those stories, because that's a way better story and one people are going to care more about than somebody's mobile banking being down for a month.
Yeah. And of course, the number one rule of storytelling is showing, not telling. And so doing things like cleaning up the local park, it shows your commitment. You don't have to tell anybody if you actually do the things.
Yeah. I'd be remiss if before I let you go, I asked kind of one overarching question, which may turn into another 4-hour podcast. I don't know. So I'm just I'm bracing myself. But again, because literally your job is to have a pulse on the industry. Like, what's kind of news for you lately? Like, what's been exciting? What types of trends are you seeing? Like, any kind of predictions based on what you're seeing? Just, I don't know. What's generally your overall take on the news in the industry right now?
Well, I think one of the positives, some of the positives we're seeing is a lot more technology, a lot of credit unions connecting with technology to solve problems that they've been having, and not or less so trying to solve it in-house themselves. Instead, looking for people who are really truly experts. It not only does that often help them get a better whatever widget is in the long run, but it's so much less expensive. They don't have to hire that tech guru person that is well into the six figures on a credit union's not-for-profit budget. So I think there's that. One of the things I think is interesting is we're seeing a lot of younger credit union people love credit unions, don't necessarily love working in credit unions. And so they build these business partnerships around credit unions. They start CUSOs. One of the things I've seen lately is companies that are actually converting to CUSOs rather than, I think the other way around is sometimes how they work. So I think that's really interesting that the businesses find the CUSO charter attractive, which is a good thing when credit unions can have more control over whatever is being built for them. And I'm trying to think what else. We did talk a little bit about the Q and FQ merger into America's credit unions. I think this GAC should be really interesting next week, and we'll have to follow up on that.
TBD.
But yes, we'll be there. But so I think there are some concerns about that merger as well. I think, 20 some years ago when I started in credit unions, I think people would have thought hell was freezing over before they merged, and now they have. And so it's going to be really interesting to see what happens with that, the outcome. Some are concerned about smaller credit unions and things like that. But yeah, I think, other than that, we hit on a lot of the stuff. I think whatever comes out of the hearings regarding Navy Federal's mortgage lending and whatever the allegations are there and what's actually happening, it's not good headlines for credit unions. So yeah, if we're not storytelling, then to get back to that, if we're not storytelling, somebody else is. So
somebody's selling it for you. Yeah. Sarah, thank you so much for just this time and this conversation. And just like I said, the way you're curating, information for the industry, there's a couple of kind of my go-tos, and you're definitely in that camp of one of my go-tos of when I see that email come across, and I appreciate it.
Well, thank you. Thank you. I appreciate it.
Kind of along those lines, before I let you go, I have 2 final questions for you. So the first is just, where do you go to get information to stay up to date? Any other shout outs that you'd like to give to kind of sources for things that you think credit unions should be paying attention to?
I follow all the credit union publications. I feel like they each have a strength that is worthwhile following, which is why we're trying to bring some of that together as well. I think the other one of my favorites is a newsletter called The Hustle. And it is about fintech and investment there, which is really, they always have, I love their writing style. I love the content that they have. It's typically relevant for, in the credit union market, but regardless, it's really interesting, period, I think, with the content they provide. And they do it with a flair. It's funny. Lots of gifts. I'm trying to think. And then I also, I read Morning Brew, and then they have a Marketing Brew, which is like a sub newsletter, I guess, of that. Somewhat similar to The Hustle, but a little more broadly focused. But I think the style is kind of still the same. I pay attention to the writing style, the content style, and stuff like that. So that kind of stuff is just interesting to me, how that's evolved. So yeah, I guess those are my main go-tos on a daily basis.
Awesome. Well, if people want to connect with you or learn more about Credit Union Connection and what you're doing, how can they do that?
Yeah, so I'm on LinkedIn as Sarah Cooke. I also have the Credit Union Connection is on LinkedIn, Facebook, Twitter, and Insta. X and Insta. And so we're there. Please come to the creditconnection.com, hit that subscribe button. We'd appreciate that. Just going to plug that real quick. And yeah, I think we'll hopefully see you and many, many others at GAC. We're co-hosting the Fab Karaoke Collab. That'll be a lot of interesting stuff. I might try my Pat Benatar impersonation, so we'll see.
Oh, I'm in for this. I know it's I'm super bummed actually if we, sometimes I fly by the seat of my pants. And if I'd thought about this a little bit more in depth, we would have recorded and scheduled this earlier, because this is probably going to drop right after GAC as opposed to before. But so just FYI, if you weren't at Walk and Roll, sorry, you missed an awesome party.
And an awesome name for a restaurant. I love it.
Right? Sarah, again, thank you so much for taking time to come, and thank you for being a guest on the Digital Banking Podcast.
Thank you. I appreciate it, Josh.
Thank you for listening to the Digital Banking Podcast powered by Typho. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you get your favorite podcasts.